Hey, welcome everybody. My name is Mark Dannenberg. This is the Options Moneymaker question and answer session. Today is October 7th, 2020. It's 7 p.m. We are ready to answer whatever questions you may have. Aaron Rumley is here with me along with Michael Kastner, and you'll be hearing from them just shortly as we get into the Q&A. If you're brand new to the Q&A, you're new to our community of traders, we are all about a mantra of learn to trade and trade to earn. Learn to trade and trade to earn. We are open to discussing anything that we do in the live trading room, in our programs and our education programs and the tools that we provide. We'd like to help you understand more about them. We realize that if you are early on in your education, whether you're learning options or you're learning futures, that there are always questions that come up. And there may not be a good way for you to present that question to us unless we set aside some time to devote specifically to you and being able to respond to those questions. If we talk about the adaptive entry system for identifying trends, that's fantastic. We could talk about the profit sweet spot matrix, where we track the daily cycle finder plus crosses. Live trading room is for real-time trading and support. We are there all day long, Michael, Aaron, and myself, some combination of the three of us. And we address a lot of questions in the room, which is just a fantastic opportunity for any trader who really wants to immerse themselves in learning their trading. You don't have to be there all day, but you can participate for whatever period of time you have available in your schedule. We also could talk about the Profit Builder Plus options education program, fantastic options education program. If you're interested in really learning options trading from the ground up. Futures trading education for learning the risk and reward of futures. It's funny, as I rewind many years ago, I had so many people telling me that futures by themselves are just so risky, stay away from them. But as I moved forward through learning them myself and then starting to teach others how to use them, it dawned on me that opinion was more about a lack of information, a lack of knowledge, not at all about an understanding of what can be done with them. So we trade them very actively in our live trading room. We love trading futures, and we hear from our traders in our community that they do quite well with futures. But we can provide an education as well as ongoing support in the live trading room. New Cycle Trading is our collaborator in most everything we do these days, particularly the adaptive entry system for providing market metrics. Craig from New Cycle Trading is just an avid partner of ours, and you will hear him frequently in our live trading room throughout the day. There's a forum on the New Cycle Trading website. If you want to go visit newcycletrading.com, you can browse around in there. There's a bunch of information that's quite important, I think, for traders there. So I have a very important message. Now, if you've been here before, you know this is not new. It's not a new message, but it is vitally important. I think that every one of you who is committed to trading should look at yourself as a small business owner. And as a small business owner, there are certain things that you need to do. You need to be educated in what product or service or business you're in, and in your case, you're in the business of trading, engaging with the markets, and your engagement with those markets is designed and intended to produce a positive result, more money in your pocket. That's the important outcome that you desire. There's a particular tool that once you've traded and used the adaptive entry system and produced your profits for the day, and after you've kind of learned what you're doing and you feel comfortable and confident with what you're doing, there is a vitally important tool that every one of you needs to have and should use every single day, and it takes just a few minutes at the end of each trading day. That's the personal trading plan. Personal trading plan is going to help you build and understand what your financial forecast is for a 12-month period. Now, you can extend it out for as far as you want, but we start with a 52-week plan for basically forecasting what your income is likely to be, could be, based on your current trading patterns, based on your current production of profits. So we normally at the end of every trading day in the live trading room, we go through and we update our personal trading plan. So today I did not do that right at the close of the market, and I'm going to do it here as we get started with this Q&A. If you have questions that are developing in your thought, please put them in the chat and we'll come to those just as soon as I update the personal trading plan that we've been tracking now for over 13 weeks at the close of the live trading room every day. First of all, we use this tool. Kudos to Aaron for creating this tool for us that allows us to very easily track the detail in real time of every single trade that we take in the live trading room. And we're using this as an example, folks. The adaptive entry system is very adaptive to anything you want to trade. If you want to trade futures, you want to trade options, you want to be a stock investor, and you want to know when the best time to get into the stock is or what get out of the stock is, we're happy to show you how to use the adaptive entry system. But what we do is we profile the NASDAQ 100 futures in our live trading room on a 5-minute chart. It allows us to provide a lot of activity generally to the room so that you can understand how to interpret the signals. And then if you decide you want to trade those same signals on options, or you want to trade those signals using the S&P 500 futures or the Russell 2000 futures, or oil or gas or whatever you choose to trade, the common denominator is the method at which you interpret the signals and engage with those signals to enter a position or exit a position. So when I demonstrate, show, and profile the NASDAQ 100, it's not intended to suggest that there's a limitation to only the NASDAQ 100. We just like trading it, and it's a great way for us in the live trading room to show you how to interpret what action to take on any given situation that may develop in the market. So we typically look at from 7 a.m. Eastern on. Here's the profile today. We traded up until 3:15 today. 3:15, these are Eastern times. And in the daily summary, we see that the two primary areas that we focus our attention, 9:30 to noon, taking all signals that the adaptive entry system offers, and 7 a.m. Eastern to 4 p.m. Eastern, trading only the trend bias and the trend continuation trades. And what we do then is we take those two categories and we assess their performance, their point production, profit production for today, and we plug those numbers into our personal trading plan to give us an idea of where our income could be, what our income could be over a 12-month period. So we can see here that today in the 12 or the 9:30 to 12 category, we lost 38.25 points. So 38.25 points. It's a losing day today. Those happen, and we did 7 trades. And in the 7 to 4 category, we did 11.5 points, and we did 16 trades. So a little more sluggish today when I was looking at the market. I was away from the market a little bit today. Aaron and Michael were hosting the room, and generally it was just a little more sluggish today. So not great point production, but here's what we do with that information. First thing is we don't make any determination of whether that outcome is good or bad. Actually, Shakespeare said that nothing is either good or bad, but thinking makes it so. So what we're going to do is give you a tool and show you how to use that tool to decide that most any day can be absorbed into your 52-week forecast and give you an idea of where you're going to land at the end of that 52 weeks profit-wise, even when you have a losing day, even when you have more losing days than what you had originally planned on having. Generally, with the adaptive entry system, no matter what time frame you're trading, you're going to have overall positive production. Those are the averages that we want to focus on. So we're going to go to today's data entry, and we are on the 7 to 4 category. That's what our tab down here. We have 2 tabs down here that we're entering this data on. So 7 to 4, and we did 11.5 points. Now with the NASDAQ 100, each point has a $20 value to it. So each point is worth $20. So that's $230 of profit today. But our trading plan has scaled us up to 3 contracts. So we multiply that $230 times 3, and we have $690 of profit today. And we did 16 trades at 3 contracts per trade. So there's 48 contracts that we traded today. All right, so the most important thing after we enter that data, that's the first step. After we enter that data, the most important thing we need to do is to take a look at these numbers up here. We've been through now 13.6 weeks. So 13 and a half weeks of our 52-week plan is now behind us. This number right here represents the number of losing days out of that 13 and a half weeks. So we've had 15 losing days. These two numbers represent the average winning day and the average losing day. So if all of our losses we're averaging 26.17, and all of our winning days are averaging 33.91. Now, on our version of the trading plan, these numbers also take into account the rate or frequency of losing days relative to the number of weeks that are behind us. So there's a calculation in here that just helps us understand if we're losing at a rate of 1 day per week, that has a different value calculation than if we're losing at a rate of 1.5 days per week. Whatever it is, what these two numbers represent for us is an absolute value of the current to-date run rate. So our valuation is that our run rate is 33.91 points per day for winning days and minus 26.17 for losing days. Now, here's the most important thing you do. You plug those numbers into E5 and E6. And we're going to simply put in 33.91, and we're going to put in minus 26.17. And so now what we've done is we've said, going forward, for every day yet to be realized in our 52-week plan, we are going to base our go-forward plan on what our actual run rate is. So our actual run rate, taking into account every winning day and every losing day, taking into account the frequency of losing days relative to the number of weeks, and that will project out for us a potential income valuation. Now we're limiting our maximum number of contracts for our 52-week plan to 3. Back here in July when we started with 1 contract, then we graduated up to 2 contracts, so we've limited now to 3 contracts in total, and I'll talk more about that when we get to the other sheet. So the income forecast is $334,611 if we were to continue at the run rate that we've already established, and if we kept our maximum number of contracts at 3. And that's having started with a $5,000 account, and we're committing no more than 10% of the balance of our account at any one time to margin risk, the amount of margin that is required for the number of contracts we're trading. All right, so the other category is trading from 9:30 to noon, taking all signals, and today we lost 38.25 points. So 38.25 times $20 a point, $765, but we're also scaled up to 3 contracts. So that's a loss today of $22.95. And we traded just 7 trades today, 3 contracts a trade, and so 21 contracts. By putting in the number of contracts, it takes into account the fees and commissions, although they're pretty minimal, but it does take into account the fees and commissions associated with trading. All right, so a little different result here when we're trading 9:30 to noon. We have a limited amount of trading time, so if we have some losses early in the morning, we don't have as much time during the day to draw those back to recover those, but this is just a different plan. If this was your plan, because you have the availability to trade 9:30 to noon, this gives you an idea of what you could potentially accomplish. We're through 13.6 weeks. We've had 24 losing days in 13.6 weeks. That rate of loss relative to the number of weeks is factored into our average run rate. The average run rate is 22.58 for winning days and 37.18 for losing days. So we're going to put those numbers in here, 22.58 and minus 37.18. And so now we have told our personal trading plan that going forward, we want our projection to be based on what our actual run rate is. Now, maybe you're somebody who thinks, you know, I'm not doing very well. I've got more losses than I thought I was going to have. I don't have as much point production on my positive days. My negative days are too big. And what happens is you start getting into this spin where you start telling yourself a story, and the story has no basis. Has no basis in terms of 13.6 weeks of underlying run rates. That's really what you want your basis to be on. So yeah, did we lose 38 and a quarter points today? Do we like losing? No, we don't like losing, but let's just plug that in and let's see what that projection is, because we know that going forward, if our run rate is replicated, meaning this may be lower than satisfying run rate of winning days and higher run rate of losing days, if that is your opinion, that you still end up with a 12-month forecast of about $159,000. Okay? I'm not guaranteeing in any way that you are going to achieve that. I'm just saying that if you continue to trade in exactly the same fashion you perhaps have been trading for a 13.6 week period, if your run rates are going to continue to be the same as they have been during that 13.6 week period, then it just becomes a matter of mathematical projection. And that's all it is. And the recycling of the capital, the reusing the same capital day in and day out, you have an account that's growing, you're limiting your risk, your margin risk to no more than 3 contracts, and you can achieve $159,000 of income, potentially, given that those are your run rates. If your run rates increase, become more positive, then that 12-month forecast may increase. If your run rates decrease, meaning they become less positive for you, that run rate or that 12-month forecast may decrease, but still should, at least based on our experience, give you a nice positive outcome. Should. No guarantees of that. It's all based on your personal trading. Again, we're starting with $5,000. We're allocating 10% of that $5,000, or whatever the balance is, to the amount of margin required for the number of contracts we're trading. And since we have this set at 10%, the number of contracts that the personal trading plan will scale up is going to be limited to no more than the number of contracts that would be less than 10% of the balance of the account. Now, I can limit it in a second way. If I don't limit it in level 2, then the number of contracts will scale up without any limitation, only as long as it's below 10% of the balance of the account. And so I can change the number of contracts. I can influence my 12-month income forecast by maybe changing that to 5 contracts. Well, 5 contracts, all that means is that I have to have enough capital in my account so that the margin requirement on 5 contracts is no more than 10% of the balance of my account. That's level 2. That's level 1 risk mitigation, and level 2 is whatever you decide to put in as your maximum number of contracts. So you might think that you are not achieving as much as you would like to if this was your personal plan, and yet you have the ability to influence your outcome to whatever number you desire. Heck, you might be somebody who wants to be ultra conservative and you just trade 2 contracts. You trade no more than 2 contracts going forward, even though you've traded 3 up to this point. That's still $117,747 of potential income, even though you started with $5,000 in the account. This is just a mathematical compounding based on your personal results and personal performance, and it's just absolutely important. It's vital that you have this trading plan and that you use it to help know the answer to the question, when is enough enough? If I know that my $159,000 forecast for a year is based on, getting 22, 23 points of profit today. When I hit 23, 24 points of profit today, I might stop. We have a lot of people in our trading room that said, I'm done for the day. I hit my goal. So it gives you an answer to the question a lot of traders never even know enough to ask, which is, when is enough enough? It also helps to even out some emotions. If you have some really nice winning days, you feel like you're on a streak, and then you have a losing day, it takes a little wind out of you and you feel a little discouraged. It's natural. It's an emotional roller coaster that a lot of traders are on. I always encourage you then to plug your numbers into your trading plan. What is the outcome for 12 months? Does that outcome for 12 months satisfy you? Is it something that you would be delighted with? If the answer is yes, you're doing great. Just keep doing what you're doing. If the answer is no, think about scaling the number of contracts that you are willing to use as your max, knowing that it will never scale to that number until you are, unless it is at least less than 10% of the balance of the account. So we're pretty excited about the whole plan, and the combination of the adaptive entry system and the personal trading plan is, I think, the best summary, or the best combination of tools any trader could want. And here, real quick, and then we'll jump to Q&A. We have so much data in this tracking tool, and Aaron has automated it in so many different ways that it's just a very versatile tool, and we use it frequently in the live trading room. If you were to ask me, and you're welcome to ask tonight if you choose to, if you were to ask me, so I can only trade from 10 to 1 o'clock every day, and I'm willing to take all the signals, I'm going to be heads down, fully focused for 3 hours. Or if you told me, hey, I want to trade from 7 to 9 every day, but then I have a job or I have a business to run, we can help you understand what to expect from those particular time frames and what combination of signals that you may want to trade. And we've built this researching category in here. So, for example, if you wanted to trade only from 7 to 9 every day, and you're willing to trade all signals plus fractals, which is a whole another dynamic, well, for the last 82 trading days, which is when we started building this tool, the last 82 trading days, your average daily profit is $471. $471 a day. Then you have to decide, is that, something that would satisfy me? Now that's per contract, so that's not counting any scale that you would be scaling up in your personal trading plan. That's just a flat per contract value. The two categories that we track in the personal trading plan, the 7 to 4 category is averaging $627 a day per contract. The 9:30 to 12 category is averaging $360 a day per contract. We have an optimum category that we've identified, which is from 7 to 4 all signals. That 7 to 4 all signals, we're not tracking this in a personal trading plan. We're just showing you an example of how to use the plan with the other two categories. But the optimum category, if you really want to immerse yourself in your business, 7 to 4 Eastern time is producing just over $1,300 a day. I can't guarantee that that's what you're going to earn every day. I'm just saying that that has been the average based on real-time production of profits most of the time in our live trading room, hour and 45 minutes or so prior to the live trading room opening. But that's a really strong production. And out of the last 82 days, there have been 8 losing days. We're going to have losing days. We know that. We just like to have as few of them as possible. So combination of the fixed data as well as the research data here, where we can help you understand when is the optimum time for you to be working your personal trading business. That's what we're here for. We want to help you as much as possible.